Okay, so I'm going to give a trade war update on the US versus China trade war and how things are escalating really since the Federal Reserve rate cut, and that Trump was not happy with, and he was not happy with the progress of the trade negotiations. Remember, I predicted weeks ahead of time that there would be additional tariffs put on. Actually, I think it was over a month ahead of time I predicted that. So this will tie in with this crazy China rumor now that is going around Twitter in the last 24 hours. And the rumor has been reported by multiple credible sources, including hedge fund manager Bill Fleckenstein, including an economics professor in Asia who is a Bloomberg columnist, including someone who is working on a documentary about dark money. The guy's name is Joel Heyman. He's I guess he's kind of a financial journalist. He's an actor, director, and a financial journalist working on a documentary. He seems to have good contacts also in the financial industry. And Kyle Bass and others are also confirming different variations of this story as well about China. So all this stuff ties in with the escalation of the trade war, with what's happening with the RMB, etc. Okay, so first, let's talk about what has happened since the Federal Reserve rate cuts. So Trump was not happy at all with only getting a quarter point or 25 basis point rate cut. He was not happy at all with the progress of negotiations with the trade deal with China. So China had promised to buy a lot of soybeans for American farmers, and I believe they bought the lowest amount of soybeans since 2004. So it was a really tiny amount, and it was a lot lower than Trump and the Trump administration trade representatives were expecting. So they viewed that as a slap in the face. And maybe we can get on in the next month or so a American soybean farmer who can talk about like their business and how badly it's affected and if they support the tariffs, etc. Because the polling for the tariffs, depending upon which poll you look at, the polling for the trade war escalating, there is a lot of people who are not happy with the trade war now. A lot of people are getting hurt with it. So maybe I could interview an American soybean farmer, ask them about their business, how bad margins are hurt, how much sales are down, if they can find other customers in other countries for their soybeans, etc. But basically, Trump, against the advice of Treasury Secretary Steve Mnuchin, against the advice of his trade representative, of his trade negotiators, against the advice of his temporary chief of staff, Mick Mulvaney, or whatever the guy's name is, he decided to enact that extra 10% tariffs on the $300 billion in goods. It's been widely reported about that. And that has set off, an additional chain of events, because then China went to suspending not only soybean purchases, but all agricultural purchases. So, and then pretty shortly after that, Trump labeled China as a currency manipulator officially. So I have here from August 5th the official press release from Treasury.gov about Treasury designates China as a currency manipulator. The Omnibus Trade and Competitiveness Act of 1988 requires the Secretary of the Treasury to analyze the exchange rate policies of other countries. Under Section 3004 of the Act, the Secretary must, quote, consider whether countries manipulate the rate of exchange between their currency and the United States dollar for purposes of preventing effective balance of payments, adjustments, or gaining unfair competitive advantage in international trade. End quote. Secretary Mnuchin, under the auspices of President Trump, has today determined that China is a currency manipulator. So I'll attach a link to the rest of the press release if you want to read it. But there's a lot of financial experts that are saying that China hasn't really been manipulating their currency as much. At most, they maybe manipulated it recently about 2.5%. But in the past, there's a lot of people that are saying that over the last, especially 5 years ago, and over the last 10 and 15 years, China has manipulated their currency a lot more than recently. But on the other hand, hedge fund manager Kyle Bass lays out a very coherent argument that, especially recently, China has been propping up their currency by as much as 30 or 40% in his estimates. He's put that on his Twitter if you want to go take a look at that. And he's talked about that in public interviews. So this trade war, guys, Zero Hedge has an article about it that's pretty short. And the conclusion of the article is that, quote, for each side, the perception is that standing your ground is better than cooperating, end quote. So I could see this being used for rhetoric and for gaining political power and saving face, and to play to bases on both sides for Xi and for Trump. that this thing can continue to escalate. And Kyle Bass has even, I believe on Monday, he did an interview for about 13 minutes with Yahoo Finance, and he even mentioned in there, and he talked about on his Twitter as well, that the US government should go after the big four Chinese banks because they launder money for North Korea and Russia and Iran and others, and just remove them from SWIFT and put all these sanctions on them, and that will exacerbate the dollar shortage that China has. So Kyle Bass is proposing this. Remember, I told you guys about 3 or 4 months ago, Kyle Bass started advising the Trump administration for free on trade. We'll have to see whether or not the Trump administration decides to listen to him. We'll see what other things China decides to do to retaliate. But this tit for tat, back and forth, unfortunately, there's going to be a lot more collateral damage going forward. So it's a vicious cycle for now. I do not see an end in sight, unfortunately, for this. And China responded. They did not stop the RMB from going from the 7 support overhead resistance levels, on the dollar to RMB exchange rate. So a few months ago, if you look at the dollar to RMB chart, it had gotten smashed and crashed after trying to get above 7, and China didn't stop at this time. And this is where we get into the crazier theory here. So in the last 24 hours, the theory is that there's a reason why China did not stop the RMB from getting to 7, besides the fact that they do probably want a weaker currency, although there is inflationary risk that China has in their own economy. In fact, before I talk about the confirmed rumor, it hasn't been confirmed by an investigative journalist. Unfortunately, I have to do the reporting here. I spent over an hour looking at different people's Twitters for responses about this, and it looks like for this China rumor that it's been confirmed by at least a handful of credible people who have even talked to people executives inside HSBC Bank. Okay, but first, before I do that, let me just talk about one of the collateral damage and side effects of this trade war. So I disclosed that one of my top China sources said that if a retail bullion dealer in China actually has physical gold bullion, then the premiums are 7%. That is, if they have it at all, or they're not selling it and they're hoarding it, waiting to sell at higher prices or hoping for higher premiums. But the same source brought me more information on how worried many Chinese are about the RMB now. Let me pull it up real quick. I'll pull up the message. Give me a second. And then I'll get to the really juicy parts of this China rumor. So, quote, "Once the currency passed 7 to the dollar, a panic started. Everyone here is asking me how to get money out of the country," end quote. So this is from someone in mainland China, an American living there for over a decade, who has a lot of good business contacts and contacts in the government. And there are a lot of Chinese people, I don't know if they would admit this publicly, but there are a lot of Chinese people very, very worried now about the state of the RMB. And honestly, I cannot blame them. And this is why you're seeing the popularity with Bitcoin in China and also gold. Although I don't think necessarily people in China are buying and holding Bitcoin. I think it's more of a temporary intermediary just to get savings out of the country, just to move money out. I think, the real buy and hold people are buying and holding gold and silver. Okay, so let's get on now to this crazy China rumor. This might be the craziest China rumor I've heard. So China officially lists that they have around $3 trillion of reserves, and the number does not move. Okay, so it moved a while ago, about a year and a half, 2 years ago, it was 4 trillion, and it's been dropping. Kyle Bass says it's a lot lower. He thinks it's 2 trillion. I think publicly he said it's 2 trillion, and he just said on his Twitter recently that he thinks around $800 billion has been used. And what happened was this theory is being pieced together. So I'll attach a link to this. The theory goes that on August 5th, so a couple days ago, HSBC Bank removed their CEO and announced plans to cut 4,000 jobs. And people were scratching their head because I believe HSBC posted a pretty good profit. So people were like, why is HSBC firing the CEO when their profit was pretty good. So here's where the theory comes in. It's going to be freaking nuts. Okay, I didn't have the tweet up right. Let me get it up here. I literally have like 10 windows open, so I apologize. Okay, here we go. So the CEO of HSBC, this is Joel Heyman. He reported this. And this is the guy working on the documentary. So the CEO of HSBC was fired yesterday, and the rumor is this. The Bank of England found out that HSBC was lending to the People's Bank of China to prop up the currency. If this is true, this is nuts. And then this Asian economics professor and Bloomberg writer named Matthew Balding at Balding's World. I'll attach links to these tweets if you want to take a look at these things. It took a while to piece these things together. So he then tweets above this, he quotes the tweet. One, record number, he says, is $400 billion US dollars. This is the big rumor he was hinting at yesterday. He has been able to piece things together. Two, a secondary source inside HSBC Bank told Matthew Balding, says, quote, don't think the number is right, end quote, but didn't seem to disagree with the other parts of the rumor. And three, other source thinks that other European banks are involved, and he was talking about Deutsche Bank and others. So I sent this to Daniel Lacaille, and Daniel Lacaille said, if this is true, then, and China, the People's Bank of China did have to borrow $400 billion recently from HSBC Bank, Deutsche Bank, and other European banks to help prop up their currency, to keep their currency from falling even faster, then let me quote Daniel Lacaille real quick. Quote, this will blow up a couple of banks, if it's true. That's what he said. And there's other people now that are confirming the rumor or confirming variations of the rumor. So hedge fund manager Bill Fleckenstein, who normally I don't know if he covers stuff like this, but he heard a source that also said this stuff, and he's saying it's true. And this lady named Kim Gitz, who's a former derivative specialist on Wall Street, but now works as a chief financial officer of a social media company, she is saying that the rumors are true too. So Zero Hedge was saying the rumors are not true of HSBC lending to the People's Bank of China, and that China's not using forwards to intervene in the FX markets. But other people are saying that Zero Hedge is wrong on this one. So basically, if I could summarize some of these things, and I didn't practice this is unscripted. Honestly, a journalist, all this information's out there on Twitter. The story from Matthew Balding and Joel Heyman was retweeted over 500 times. So if the mainstream media and the mainstream financial media were actually doing their job, a good investigative reporterist or journalist, a real journalist, would actually see this information publicly that it was retweeted and say, this is a good scoop here. If I do some research, I can, make a lot of money. I could get a promotion. I can maybe win an award for investigative journalism. But I think the reason this is not happening, unfortunately, is because HSBC Bank, there's a documentary called Dirty Money out on Netflix. And there's an entire episode on HSBC Bank. And HSBC Bank knowingly laundered many, many billions, tens of billions, if not hundreds of billions of dollars for drug cartels and organized crime and also terrorist organizations. And they interviewed whistleblowers about it, and the Obama administration, the Department of Justice, the Attorney Generals. So your Loretta, I always screw up that name, Loretta Lynch, Eric Holders, the white shoe boys who worked at the Wall Street white shoe firms, they all squashed this. And even though HSBC Bank made tens of billions of dollars in profits from laundering this dirty money, and there should have been criminal charges because they knowingly laundered it. The other part of the story is James Comey was hired. So he was temporarily put on the HSBC Bank Board of Directors as a fixer, and he was given an enormous amount of stock options and salary to help get the charges dropped. So this is like, the usual group of suspects in DC and Wall Street of Eric Holder, Loretta Lynch, James Comey, and a couple other people all working together to get HSBC Bank off the hook. And HSBC Bank, if you're not familiar, I believe they spent a lot of money, many, many millions of dollars per year advertising their financial products for mutual funds, stock mutual funds, and bond mutual funds on CNBC and Bloomberg. That could be why this is not being talked about. So it is really, really ridiculous at this point that hopefully I'm really praying here that a journalist who is independent will pick up, maybe they listen to this podcast, will pick up the information here that they see in the tweets and start to, do this story. I should not have to do this. This should not be in my job description. I have Super Chat. You can donate now. Unless they suspended my Super Chat, which wouldn't surprise me. I have Super Chat now. Unless YouTube suspended it, which would just be another reason to make sure I can earn a living from my content. Okay, so I think I got a little bit off track here. Okay, so let me continue with the rest of the story. So Kyle Bass has stated that he thinks it's about $450 billion that China borrowed to prevent their currency, the RMB, from collapsing. That China has only been able to slow down the RMB from devaluing because his thesis is that they're preventing the RMB from falling. They're propping it up. He says it's overvalued by at least 30 or 40% in his estimates. He's put that out publicly. And he also put out a 2015 article. Now, this is 4 years old, so it's not the most accurate about the exact numbers, but it explains how China does use dollar swap addictions, how China uses dollar swaps. So the banks have big loans. These European banks like HSBC and Deutsche Bank have big loans out to the Chinese government. And this derivatives expert named Kim Gitz, she's saying that the banks have really, really big credit risk. So this could not only in the Eurodollar market and with China. So this could not only hurt China and the RMB and people who are saving in RMB, which is why people want to get RMB and their savings out of the country, but this could also hurt European banks even further, exacerbate the problem that is the toxic dumping ground that is Deutsche Bank, exacerbate the problems that European banks already have. Because European banks have a lot of problems. They have counterparty risk with each other, bad loans. They have bad derivatives positions. They have bad loans to other emerging markets. So the European banks are a mess. So we'll have to see what happens. If you want me to read these tweets, I can with Kim Gitz. Okay, let me get to some of the tweets here. So the total number of liabilities that the bank would have is constantly moving at market price. So it's like an effective loan is what you're saying. So basically, the People's Bank of China used derivatives positions because their reserves were a lot lower than they claimed. So there's two theories going on. There's two main theories. If you're not familiar with my other work, the two main theories about China's reserves are, number one, the Kyle Bass's thesis that China's total reserves are way lower than 3 trillion. And the second thesis, which is what Daniel Lacaille and Jim Rickards has, is that a lot of that 3 trillion is tied up. So it is used as collateral already, or it's already pledged for Belt and Road Initiative. And then China only has whatever their treasury position is, and then also whatever they're running with trade surpluses to get dollars. And the other problem is that China, and I talked about this, remember, in my China research video, is dollar-denominated debt. So China has at least $3 trillion. Some people think a lot more than that. I actually have been seeing $30 trillion worth of dollar-denominated debt estimates recently. But I haven't seen any detailed itemized research about that. I've seen a few estimates up to like 30 trillion in dollar-denominated debt floating around the Chinese economy. There was actually a new article that just came out in the, let's see here, yesterday, by Alexandra Stevenson and Chao Li from the New York Times about the Chinese economy, circulating in China's financial system more than $200 billion worth of IOUs. So as the trade war escalates, Beijing needs private companies to pull China's economy out of its rut, but for some, ready money can be hard to find. So this is out of Shenzhen. China was on the cusp of the biggest building boom the world had ever seen when Zhang Zhijiang started his architecture firm. It was 2007, and the money rushed in for contracts to design residential complexes and an exhibition hall. These days, with China's economy slowing and his own business dropping off, Mr. Zhang can't seem to get paid on time. He is now accepting the financial equivalent of IOUs from as many as 1/3 of his clients instead of cash. Quote, "It wasn't like this before," end quote, he said, but he added, "It's better than nothing." So China's trade war with the United States has escalated in recent days, posing a growing threat to an already slowing economy. Beijing needs private businesses like Mr. Zhang's and his clients to help rekindle the growth and provide paychecks to Chinese workers. But many of those private businesses are short of cash. Instead, more than $200 billion in IOUs, known in the dry world of finance as commercial acceptance bills, are floating around the Chinese financial system, according to government data. So it says China is not running out of money, but Chinese banks are reluctant to lend to private businesses because they consider big state-owned enterprises more reliable in paying off their debts, meaning that it's bad collateral. So if you want to read that rest of the article, I'll attach it. Let me talk about the second theory a little bit more. So I talked about Daniel Lacaille and Jim Rickards. So actually, Jim Rickards just put out a tweet today, earlier this around noontime. So, quote, "Lots of chatter about decline in China's holdings of U.S. Treasuries. Implication is the Chinese are dumping them. Quite the opposite. Chinese are selling their treasuries because they're desperate for cash to meet obligations and offset capital flows. Bad news for China, not the U.S., according to Jim Rickards." So he's in that second theory camp of China has $3 trillion or a little bit lower than $3 trillion now in dollar reserves, but a lot of it is tied up either as collateral for other things like hedge funds or in illiquid investments, or excuse me, I just lost my train of thought. I need a water break. I've been talking now for quite a few minutes. Okay, so Jim Rickards was talking that China's reserves, their $3 trillion in reserves, are already tied up in hedge funds, sovereign wealth funds, other illiquid investments, or they're being committed. Over $1 trillion has been promised for the Belt Road Initiative. I think it's going to end up over $1 trillion for Belt Road Initiative. But China, it looks like things are finally catching up to China now. A lot of evidence that things are starting to teeter. Okay, this is not one tiny little Twitter account where no one knows this person in the financial community. These are respected people in the financial industry now saying that they heard the same rumor from other sources that are also credible. So it looks like China did borrow hundreds of billions. We don't know the exact number. Okay, the Kyle Bass is floating around that it's $450 billion. I've seen $400 billion from Matthew Balding. I've seen a couple other estimates. Things are starting to unravel in China. It's just that simple. And props to my buddy Louis Camersano at Small Gold. Unfortunately, he shut down his YouTube channel because it wasn't growing. It was censored too much. It wasn't growing the way he wanted to, and it was censored too much. And in 2017, he wrote an article. You can go to his website, Smallgold, SMAULGLD.com. And he wrote an article. I was talking with him about this before I started the show, that gold won't save China. That all that physical gold that they have, they've made a lot of mistakes the last decade with dollar-denominated debt, with RMB debt, trillions of dollars in misallocated capital, and a lot of people, as I told you from my source inside China, a lot of people in China do not trust the government anymore, especially with the currency. So I would expect this is going to be good for gold. But it's going to be, that as the trade war escalates, it's going to be bad for a lot of different people. People in China, people in the U.S., it's going to be bad. Because there's no end in sight. This is benefiting both parties in the trade war, Xi and Trump. They don't want to concede now. They want to save face, both of them. Although at one point Trump wanted to win, any win, but I think those days are gone. I think Trump he's going against a lot of the advice of a lot of his trade advisors. Yeah, Lewis deleted. Hey Chris, Lewis deleted all of his YouTube videos. I believe he deleted all 100 plus of them. I think they're all gone. They're all up on other video upload websites, and he re-uploaded them, I think, on another service to his website. Tamar asked an excellent question. Will the Chinese start selling all the U.S. real estate they bought the last 10 years? So this is a very interesting question. This is my theory. So if the trade war continues to escalate, and if China does retaliate in an even worse way, I think what could happen, I hope I'm wrong about this, but I think what could happen, and the U.S. has done this before, is the U.S. can just straight up seize all of the Chinese-owned real estate and then put it up for auction and have other buyers. So the government can just seize it without even paying the people back. Eminent domain or national security. There are rules changes. There's a lot of people in the gold community that do not understand this, that the government can expropriate land, and in a lot of cases they don't even, especially if it's for national security, they don't even have to give you any money for it. So China may sell all of their treasuries according to Jim Rickards, but China is not even, there's people out there that are saying that China is one of the largest holders of US treasuries. I didn't look at a new list, but I think they're not even in the top 5 anymore. So China's not even in the top 5 holders of US treasuries anymore. Russia dumped, if you remember this, about a year and a half, 2 years ago, Russia dumped all of their US treasuries and it didn't crash the treasury market at all. So in a trade war that's escalating, this is the problem that most people don't understand. If you go back through financial history and history, you can study this. As trade wars happen, governments change the rules. And so all these rules can be changed in the favor of national security. AG says you never truly own property. I 100% agree, especially with the way property taxes are in the US and a lot of other countries. You don't really own it. I don't know if China's out of their treasuries, but my point is that China could dump all of their treasuries and it wouldn't totally crash the treasury market. There's still a lot of demand for treasuries right now, especially when people are buying treasuries and they're making big gains on principal. If you copied Stanley Druckenmiller on his trade, you already made out a lot on his principal trade. American Expat says Russia didn't want to crash the treasury market. They wanted to cash out and get gold. This is correct. However, the spin from the gold community and the alternative media was that Russia was going to crash the treasury market. You can go and look at the headlines and look at the podcast, the interviews and the articles that Russia was going to crash the treasury market, and guess what? It didn't happen. And a lot of it has to do, like I said, with rules changes, with what Victor Sperandio talked about, with the primary dealers and the hold to maturity account. Sperandio has great research on this. I've interviewed him in the past. I've talked about there's 2 or 3 really good articles from Victor Sperandio talking about how the largest banks got rules changes from the Fed about 2014-ish. Wow, I got almost 200 people watching this live stream show. Pretty good. Okay, well, in my roundabout way, I think I covered pretty much everything I wanted to cover. I didn't script this. I didn't have notes. I just have like all these windows open. So hopefully maybe someone else will, maybe someone else will take the information that I'm talking about here and write a more coherent article. My buddy Tho Bishop from the Mises Institute, he just put out a really good piece about China and their credit bubble. He put out yesterday on the Mises Institute website. So if you want to take a look at that. So it appears that China did borrow, the People's Bank of China and the Chinese government did borrow money from European banks. We don't know the number. People are confirming it. And I would love for an investigative journalist to get into this. We'll see what happens. I don't think the mainstream media is going to do it. It's going to have to be someone independent. And there's a big story there. There's lots of views, lots of clicks if someone starts digging on this. And this is why I don't trust governments, all these examples here. Again, countless examples. Joe Biden and his son are really dirty. Ukrainian government, Chinese government. Read Peter Schweitzer's book, Secret Empire. It's detailed in there. So I don't know if China's going to collapse right away, but it is teetering. Look, if they didn't, okay, this is a very important point here. Why would China need to buy, good thing I remember this before I stopped the show. Why would China need to borrow hundreds of billions of dollars from European banks that are not necessarily good counterparties if they have trillions of dollars in reserves? They should not need it. They should not need to borrow hundreds of billions of dollars to help prop up their currency to prevent it from devaluing or a collapse in their currency, devaluing 30%, 40% in a rapid amount of time. So I think it brings more credibility to a lot of what Kyle Bass is saying. Jay Kokenin, I think I screwed up your last name. I apologize. Historically, China has crashed 5 currencies over the years. They're pros at it. Yeah, and China also invented paper money. I should probably do a history lecture on this, talking about the invention of paper money. I found a good article about that. Maybe I should set that up for another show. Do a history lecture on that, a financial history lecture on paper money. Tortoise62, didn't HSBC get caught for laundering money for drug cartels too? Yes. Yes, this is covered in the documentary Dirty Money. It's like 6 or 7 episodes on Netflix. There's an entire episode on HSBC Bank, interviewing whistleblowers, showing the research for about an hour, going through all the details of HSBC Bank knowingly laundering many, many billions of dollars for drug cartels, organized crime, and terrorist organizations. They knew they should have been charged with criminal charges, and the group of Loretta Lynch, Eric Holder, and James Comey, the fixer, they hired him too, all were involved in getting them off criminal charges. And I think HSBC Bank only paid about $1.9 billion in fines, but they made over $40 billion in profits just in the 1 year from all the profits of laundering the money. Tamar asks, would it blow up banks in Europe or China? Yes, but I think the central banks are aware of this, and this is why you haven't seen failures yet. Because I talked about this analogy like the cartoon, what was it, Daffy Duck, from one of those Looney Tunes commercials where he's in like a rowboat and the rowboat springs like 10 leaks, and all of a sudden he puts his hands his hands into each leak, his feet into each leak, his beak into each leak, and he's closed up most of the holes, and then he even sat down his butt on one of the leaks, and, there's just too many holes to plug. So it's like that. I still think, my educated guess, I still think the European Union will probably blow up first, but we don't know how much currency swaps are out there between the Fed and the European Central Bank. And it could be many tens of trillions. We don't know the number, and we probably never will. So thank you, Blue Steel, for the $10 super chat. I appreciate it. Thank you, AD, for the $10 super chat. This is crazy, isn't it? So, according to the gold community, according to the alternative media, China has enormous amounts of dollar reserves. China can dump their treasuries and crash the dollar. China has gold and they're in great shape. But if all that stuff is true, why does China need to go borrow for that hundreds of billions of dollars from a European bank that's a lot of counterparty risk to help prop up their currency? And this is not me with the rumor. This is Kyle Bass heard from a credible source. This is Bill Fleckenstein heard from a credible source. This is a financial documentary filmmaker who heard from a credible source. And then there's Matthew Balding, too, who is a Asian economics professor. And he even confirmed it. He didn't confirm the exact amount, but he confirmed it with a upper management person inside HSBC Bank. And you can see that on his tweet. There's over 500 retweets. So just crazy stuff. Some people are like, stop reporting on China. Well, that's where all the stories are. I mean, I cover other topics too, but the majority of stories coming out are about European banks in China. Dollar continue to strengthen. The dollar would continue to strengthen, but this is why you see Trump panicking. This is why he wants more rate cuts. He's anticipating this is going to strengthen. I'm sure maybe he's gotten a briefing on this. 210 people watching the stream now. This might be a record. Zero Hedge is, excuse me, I haven't checked Zero Hedge in the last couple hours, but they were denying that this story is true, and other people, respected people in the financial industry, were saying that Zero Hedge is wrong. So maybe Zero Hedge, maybe the handful of people that write under Tyler Durden. I really like their writing, by the way, but maybe the handful of people writing under Tyler Durden will actually admit they were wrong and then start covering the story. But we really need to have some good journalists dig into this, because this is not my expertise doing all this stuff. Deflation, depression, so the central banks and governments won't allow deflation for more than a short period of time. They'll change the rules. The nuclear option that is being saved is to devalue all the major currencies against gold. They won't allow real deflation. That would destroy their taxes, their capital gains taxes on stocks, capital gains taxes on bonds, and property taxes on real estate. Real deflation, beneficial deflation for savers, beneficial deflation for consumers will not be allowed. I've said this many times. Hey, I appreciate it if you liked the video. What's weird is that my China video that I spent over 8 hours doing the research on, it got over 600 likes and it still doesn't even have 10,000 views yet. That's how bad YouTube censorship is. I think that's the most likes I've ever gotten on a single video, and I didn't even get 10,000 views on the video. Hey, Sean, I appreciate your enthusiasms. Sean, I appreciate your enthusiasm. Please don't cuss like that. The mainstream media, I don't think, is going to cover this, because HSBC is a very big paid advertiser on CNBC and Bloomberg. Very, very big. This will have to be the independent media. So if you have a friend in the independent media and they're looking for work, they're looking for a big scoop that could put them on the map, that can get them a lot of clicks, that can make them a lot of money with a documentary or covering this in multiple articles, this is it. Yeah, the email subscribe button, I have to get a developer to fix it, so I apologize for that. I've been too busy making content. It's just me right now, so I have to do literally everything by myself. It's incredibly tiresome. I'm already starting to burn out from doing one or more videos per day now for 2 months straight. I don't think I've had a day off. I think I took 1 day off in the last 2 months. Supposedly there's YouTube channels with American soybean farmers that are going into the details, Tortoise, and they think that the $20 billion in bailout money that the U.S. Department of Agriculture is supposedly going to give soybean farmers is nowhere near enough. That there's a lot of very lowball assumptions that it would probably have to be more than double that. So I think it would be interesting to hear the perspective from a soybean farmer, if they can find other customers, you know, just general things about their business, if they still support the trade war, stuff like that. Oh, I would prefer no one to get subsidies, but in reality, you know, this is not the world we live in. There is no real free trade. Governments cheat with currency or tariffs on imports. This is just the world we live in. Now, I just point out the corruption. I criticize all governments and I just point out the corruption. So, the gold people who are saying that China's going to do better than everyone else, China has all the gold, their debt problem doesn't matter. Why did China just borrow so much money? I don't think they have a good answer. Patriot Star says corruption is rampant with the elitists in control. I 100% agree. Yeah, the Chinese economy has a lot of problems. China's government is actually subsidizing pork prices for now, so the average Chinese person doesn't even know that there's a big shortage of pork because the prices are not being affected yet. So I don't know how much longer the Chinese government can do that, but this is their preferred method of control. Sean asks, is HSBC Bank propping up Bank of China? Is propping up the People's Bank of China? No, I think HSBC Bank thought that they can make a profitable loan to the People's Bank of China, but it's a lot of risk for them because it's a big loan. We don't know the exact dollar amount. Someone will dig it up and we'll find it. The rumors appear credible. So HSBC was greedy. They probably are expecting a bailout. And according to the source here from, what was it, Matt Balding, that the Bank of England had to intervene. And that may be why the CEO of HSBC Bank was fired, even though HSBC Bank released pretty good earnings from what it sounds like. Northern Jackalope, thank you for the super chat. Do you see gold going higher? Over the next 2 years, yes. In the short term, who knows? If you own physical gold, it's not as an investment. It's just for savings instead of saving in fiat currencies, which are all intentionally being devalued and destroyed, and insurance and wealth preservation. So physical gold, I don't view it as an investment. I just view it as savings. That's not financial advice, just my opinion. I'm all that's left. I don't know about that. Thanks, Joseph, for the kind words. I appreciate it. A record 240 people watching the live stream now. I'm starting to get tired, though. My voice is going. I think a lot of people inside the Federal Reserve are a lot more open to negative interest rates now. And the Ben Bernanke's theory, which I talked about a couple weeks ago, of zero coupon perpetual bonds. So even a few years ago, no one at the Federal Reserve and none of the neo-Keynesian academics were open to this, and it seems that now they're more open to this. And a lot more people are starting to be a lot more, I'm trying to think of the right words here. They're starting to be a lot more open to MMT. There's a lot of professional money managers on Wall Street now who are like rich champagne socialist, hardcore Democrat guys who are super rich, and they're in favor of MMT. I see these interviews on Real Vision Television all the time about this rich guy who started with very little, made a lot of money, and now he wants MMT. The Fed just announced that they stopped QT. No government is doing a good job. I criticize every single one of the major governments. Japan is a mess. The European Union is a mess. The US is clearly a mess. And China is a mess. And the people who are trading this stuff, they're trying to bet which countries or zones are going to collapse first. Those are the people who are making all these big trades. And if they bet wrong, they could blow up and go bankrupt or lose a lot of money. No, I'm not an anarchist. I'm a limited government libertarian. Let's reduce the government a lot, and then we'll see what happens after that. No, I'm not an anarcho-capitalist. Although I am sympathetic to a lot of their arguments. Well, the pension funds should have invested better. A lot of these pension funds tried to save money by not hiring competent money managers, and they've just gotten fleeced by Wall Street in fees, and they made, decades worth of bad investments. The pension funds, a lot of them, at least some of them will get bailed out, depending upon which political party controls Congress. So the Democrats in Congress are already working on bailing out Democrat pension funds. And I suspect when the Republicans are back in control of Congress at some point, they'll work out smaller bailouts for smaller pension funds that are mostly Republican districts. I had job interviews at some of these pension funds. They didn't even want to pay $65,000 per year for a money manager. For many hundreds of millions of dollars in assets under management, they wanted like a part-time person or someone they could pay like 30 grand to just pick out a list of really bad mutual funds, stock and bond mutual funds. That was it. So in general, I think a lot of the problems are people won't take personal responsibility. So I think the pension funds, they won't take any personal responsibility for their screw-ups. But the pension funds they funded a lot of bad real estate investments prior to the 2008 bubble. They funded a lot of bad technology stocks that busted in 1999 and 2000. And they funded a lot of bad shale oil companies that either have busted already in 2013 and 14 or will bust soon. If the oil price keeps going lower in the next 2 years, there will be enormous busts in shale, and the companies that are bought out will not be bought out at big premiums. There will be a big bust in shale too in the next couple years if the oil price keeps going lower. Hey Grace, thanks for the $10 super chat. I appreciate it. All these economies are hoaxes. The European Union, China, the United States, they're all with fraud, waste, fraud, corruption, and abuse, trillions in misallocated capital. Okay, guys, well, I'm getting tired here at 46 minutes. There are a record amount of people, but I'm not really sure how much longer I could keep talking for. I did not do the best job going in order of things, so hopefully you guys will still be okay with this. I'm doing the best I can here. I'm not feeling 100% right now. Tomcat, thank you for the super chat. We're in a busted world. I think everything's just one giant fustercluck. The politicians all thought that I'm in office now, I'm getting paid, I'll borrow a lot of money, and 10 years from now when things blow up, I won't be here. And you could pretty much say that about a lot of different governments, whether it's emerging markets, all the dollar-denominated debt they borrowed. Look at all the corruption scandals in Brazil and elsewhere. They borrowed a ton of dollar-denominated debt. They used Petrobras as a piggy bank to borrow against and steal from the assets, to loot it. I could go on and on. There's tons. These politicians were tempted that they could borrow a lot of money in the short term, get reelected, get a cushy consulting gig or a lobbying job after they left office, or get on the board of directors of a private company, and when things blew up 10 years from now, they wouldn't be there, and most people, their memories wouldn't even blame them. So you can't blame everything on capitalism. This is a corruption of the political system too. These politicians are not thinking long-term about their countries. They are selling everything out, selling their taxpayers out, selling savers out, so they can get rich quick. Anyway, you can't have capitalism without bankruptcy, and how many bankruptcies are actually being allowed anymore? Yeah, it's Crazy Ant says China will collapse first before the European Union. It's tough to say. I would only put probabilities on it at this point. I don't think anything's guaranteed for sure about which one collapses first. We don't know what's going on behind the scenes, guys. So we know that there were two emergency... I'll give you an great example of this. So we know that there were two emergency meetings with the U.S. government, the Federal Reserve, the FDIC, the Treasury Department, with the and the plunge protection team, the announcement of the Christmas Eve of the emergency meeting that Steve Mnuchin screwed up and put the press release out when he was on vacation. The Christmas Eve emergency meeting about the corporate bond market and junk bond market in the U.S. blowing up. And then we know that there was another one, I think, at the end of May. So there was two emergency meetings we know about about the U.S. corporate bond market blowing up and the junk bond market in the U.S. blowing up. We know about 2 emergency meetings since Christmas Eve. How do we know that there's not more than 2 emergency meetings? How do we know that there's not one every week or at least one a month? We don't know. The reporters were only able to find out one from an insider, from a source that we found out from the street.com at the end of May. And then we found out the botch one that Steve Mnuchin announced, which I'm sure he regrets doing. Which banks? Which country? Yeah, I would agree with that. Most of triple B, which is 1 rating above junk, is actually really junk. Danielle DiMartino Booth has talked about this. Well, I've gotten a lot in Super Chat today. There's quite a few ounces of silver there. Okay, guys, well, we're at 50 minutes and I'm pretty tired. So you can put your questions and comments below here. If there are stories and the reporters actually do run and start investigating this further, feel free to put the stories below the video after it's over. Okay, guys, that's it for right now. My brain needs a break. I'll talk to you guys later. Bye.